I have learned so much from teaching people. And I've been trading for 20 years. Now I've been trading for nearly 40 years. You have to wake up tomorrow morning feeling confident and not having dug yourself such a big hole. I never thought about trade psychology for the first 20 years of my career. Why they screw up, why they revenge trade, why they overtrade, all the things that we know you shouldn't do. When I was screen trading with my own money. I lost that £30,000 when I first started. And that's how I learned what not to do.
Hi everybody, this is Boris Schlossberg. Welcome to another edition of the Trading Battle. And today, all the way from the other end of the world from me, I have a very, very special guest, a gentleman who actually probably shares a lot of the war stories that I've gone through as well. But he looks about 30 years younger than I do, so he must have had an easier life than I did. Everybody say hello to Jason Sen from daytraderideas.co.uk. Jason, welcome to the show. Good to have you with us.
Hey Boris, thank you so much.
Nice to have you around. Now, Jason, it's not very often that I get to talk to somebody who's actually survived the 1987 crash, which was really like a foundational event for me in my life because I was all of whopping 24 years of age. I don't know how old you were at that time. I worked for a very famous firm that went bankrupt called Drexel Burnham Lambert, which was,
I remember,
of course, Michael Milken's famous firm, better known as Drexel Burnham and Churnham, as we used to proudly call ourselves, at 55 Wall Street. But I always tell people that no event in my life I remember as clearly, minute by minute, moment by moment, as the 87 crash, which to this day still was the greatest one-day decline in the history of the U.S. stock market. So I'm just curious, is that day as vivid in your mind as it is in mine?
Probably not, to be honest, but I do remember it clearly. I was 19 years old and I started at Shepherd's and Chase when in April of 87. As I say, I was 19, had no idea what was going on. I didn't even know that I would be working on the floor of the London Stock Exchange. So the first day when I went down there, that was quite mind-blowing. I was working as a trainee broker, so I wasn't actually going into the pits. I was actually taking orders off the phone. I was loving it. I was 19 and it was intense. It was quite mind-blowing. So I wasn't actually trading. There wasn't any money at risk at the time. But yeah, certainly the memories are incredible. I lost my job actually in the December afterwards because the volumes died. And I thought that was the end of my trading career.
Did you start like in September? Was this like literally 4 or 5 weeks on the job? How fresh were you, when the...
April 87. So what is that? It's 6 months or something.
It was 6 months. And prior to that, it was just boom, boom, boom. It was the booming 80s. I remember, like everybody had a BMW, cocaine was everywhere. And it was just, everybody was the master of the universe. It really was a cliche.
I think even mobile phones had just come out at that stage. I think the big brick ones. So, well, in London, we were called yuppies. I don't know if it was the same term in the US.
We're dating ourselves. But I just, the audience just needs to appreciate it, just how crazy that time was. It really seemed like anything was possible. You truly were, master of the universe. And at that time, Wall Street and, of course, the city were the center of the world at that point. So, after the crash happened, and obviously, as you said, things died down. Did you say you got laid off at that point or you had to find another job?
Yeah, by December, volumes had died. So having the bank had expanded the team so quickly, they had to make cutbacks. It was kind of last in, first out. Actually, it turned out to be probably the best break in my career because 2 or 3 months later, I got picked up by a market making company. So I actually got into trading as opposed to broking. So I was pretty lucky.
Wow. It's funny. So, really, your career and my career kind of really parallel paths because I used to work. There was a NASDAQ market making company called Herzog Hein and Geduld where I spent a year on the desk. After which my first wife threatened to divorce me because I'd become just absolutely the worst human being in the world, having just a personality that was ready to, to bite everybody's head off.
We were the same in London.
Same in London, right? It was just like you would kill the guy for a quarter at that point. So for the audience, before electronic trading, all dealing was done on the phone. and almost all deal flow, every stock was basically traded by a market maker who would make a bid and ask. And at that time, bid and asks were done in 1/8 of a point, 1/4 of a point, 1/2 of a point, which was very lucrative because you can't, like, imagine a $50 stock, and you were able to buy on the bid and sell the offer for 1/2 a point. That's like, it was just free money. Exactly.
Yeah.
Exactly. When we,
All you had to do was turn up.
yeah, it's not micro pennies like it is now, where everybody's, high frequency is cutting you out for a tenth of a penny. But at that time, it was all, it was the other thing that was fascinating by that time. I'm sure you probably have some stories. Is everything was, my word is my bond. The guy picked up the phone. He said, I have 2,000 at 50, yours. And you said it, you broke it, you bought it, or you owned it. There was no way to get out of the trade, right? I mean, I wonder if you've had situations where, like, you got stuck with positions either by mistake or because you rookie error, stuff like that.
I've got a good one for you. Well, I started on the trading floor on the London Stock Exchange, which was where they traded stock options. So ours was face to face, writing it on a card in a pit, which was intimidating because it was take no prisoners. They really gave you a hard time if you screwed up. And then around the early 90s, I moved over to the London International Financial and Futures Exchange, which was open outcry on steroids. I mean, it was like Chicago. It was a small version of Chicago. And that was just incredible. Exciting, but frightening when you first go down there.
I remember they were trading the DAX and they were trading the FTSE, right? That was, and actually it was a big controversy because you guys the Germans really wanted the DAX back in
That's right.
in Frankfurt. And you guys, because you guys just, for a while there, you were just minting money because the DAX was the primary index in Europe that everybody traded. And you guys were like, you really had a lot of flow on that, right?
Yeah, actually, the DAX wasn't traded on the futures exchange. That was traded, I guess, on Eurex. I can't quite remember, to be honest. You understand it better than I do because it wasn't a contract that we traded. I personally was a market maker in short-term interest rates, UK short-term interest rates, the STIRS contracts.
Because interest rates were swinging by 2%, not 2 basis points, but 2%.
Yeah, I mean, in those days also, they didn't telegraph what they were going to do. They didn't keep you up to date with what the bank was thinking. For some reason, they thought it was a great idea to surprise the market every time they wanted a rate move. Like nowadays, Bank of England, FOMC, they have a meeting, you know exactly what time they're going to announce it. You've got an idea of, and of course, they only move in quarters anyway. But like you said, in those days, it would be 1%, 2%. And you could be having lunch on a Tuesday, bang, rate move. And you're like, what?
You're on the wrong side. It's brutal. It's a brutal move, right?
Oh, yeah. And I was always on the wrong side. Well, actually, you asked me about an out trade. And the one that I really remember, there was an election in the early 90s, general election. I think Labour were expected to beat the Tories, but the Tories won. I've come in the morning. And of course, interest rates collapsed. It was seen as a good thing for the UK. And I had an out trade. So just before the short sterling market opened, my clerk goes, "Hey, you got an out trade from yesterday." Now, if the Labour had won, I would have made a fortune, but the Tories won, and I was down £100,000 before the market even opened. I mean, you can imagine. I was I don't know, maybe 22, 23, in this blind panic down a six-figure sum of money. It wasn't fun.
How did that work? Did they give you a certain budget to trade? I mean, did you have limits? How did the process work at that point?
I was quite lucky because I was picked up by a very big trader from Chicago. His name is Roger Carlson. He had a company called First Continental Trading, and he was setting up in London. And I was lucky enough to be one of the guys that he hired, and he had a lot of money to throw at his business. So when we wanted to get involved in a position, we could trade pretty big. We were some of the biggest traders in my pit anyway.
It was primarily for market making purposes, right? So your job was to basically try to keep an even book.
I didn't keep an even book. I used to have quite big positions, and he was very good because he would swallow them, and But anyway,
and you would try to ride them out.
yeah, I was I was I was quite a short seller of option skews.
Oh, really? You mean like you would sell premium naked on the skew?
Yeah, I would. That was one of the, and I got caught out badly doing that once during the Russian crisis in the bond crisis in 1998 when interest rates went through the roof. So it didn't always pay off.
You and long term capital management, right?
Yeah, they screwed me up big time.
But amongst, I mean, that time, obviously clearly a heady time. How long were you in the pit for? Like, was it a couple of years?
Well, I mean, I was on the London Stock Exchange in the London traded option market. After my broking career, when I went to market making, I stayed on that floor. So I was learning how to make markets in individual stocks like British Airways or something like that. And then when I managed to move over to the live floor, I don't know, maybe 91, something like that. Then I was trading short sterling options.
How long did you do that for?
So I did that up until about 98, 99 on the floor. And then I transitioned to screen trading options at first, and now I'm mostly forex.
That's a 6-7 year stint. By that time, you were kind of a weathered veteran at that point, right? I mean, you'd seen a lot of different markets.
By the millennium, I had quite a lot of trading experience, floor trading experience. Problem for most people was the transition to screen trading was a completely different skill set. Especially if you're a futures guy. For an options guy, actually, I found it relatively easy, probably easier than the futures guys, because of course on the floor you did a trade, you had to quickly work out your hedge in your brain. What's the delta, right? I've done 500 spreads. Then you have to figure out your theta, your gamma, all in your brain, and you have to react really quickly to get your hedge off. Whereas when you're on the screen, suddenly all the Greeks are updated for you as soon as you trade. You're like, wow, this is amazing. I don't have to use my simple, my maths anymore. And you know exactly how many futures you need to hedge. So for me, that was kind of cool.
For futures guys who just sort of were directional, was we call Delta One products. Why was that? Why was it? Why do you think it was so difficult? What was the skill set on the floor versus the screen?
Firstly, it was a very social environment. So if you got on with certain people in the pit or you looked after them, say you had a good relationship with JP Morgan, he might be more favorable to you and make sure he traded with you most of the time because you are literally fighting for the business to get noticed. It was physical. And of course, you could see the order flow. So you're standing in the pit, you know that he's offered in that and he's bid in that. And, you could even look outside of the pit and see who's on the phone. Someone's going, hey, what's the size in the pit? And, the guy's signaling back to him, it's 4545. You can see the order coming into the pit. He might be like, sell 1,000 at 4. If you were quick or you happened to be looking in the right space, you'd see the order come in.
You could effectively front run the order or piggyback
almost. I mean, I wasn't a futures guy, so I don't really know if that happened very often. But basically, it was noise that gave you a sort of sixth sense as to what the market was doing, and then you move on to the screen, and it's just numbers in front of your face. You lose all the senses that you developed from being in a trading pit. They were useless.
Which was a lot of audio, visual cues and facial cues, all the things that sort of we as human beings.
Exactly. In facial cues, you're right. You could see maybe, that was the thing. You had to have a poker face. If in my pit, if volatility was getting squeezed and I was short, I couldn't let on that, I was suffering and I was down 20, 30, 40,000 pounds. I had to, you had to ride it out.
You could also see somebody who was in trouble and then you could, you had all that, kill or be killed, going for the.
And there was spoofing as well. If I was long vol, say for example, or I wanted these calls to move up, I could say, I'm bid for 1,000, bid for 1,000. I wasn't really, So there was that element to it. There was all these different elements which you just didn't then have on the screen really. In fact, you just reminded me that someone designed some software that created like a noise when volumes were increasing. Like say trading the Bund and suddenly the orders start increasing and the volatility is moving up and down, there would be an audible like floor-like sound because they thought that would help people.
I think like the poker element, I remember that element so well from both market making on NASDAQ and then market making in options and just jelly, like the whole idea of the poker element, the idea that the market lies. Like, I think most people who are novices come to the market thinking it's telling you the truth. When a lot of times the price is lying to you. I mean, this is the reason why people, when you're buying, novices buy and they go, "How come it went down?" Well, because they were spoofing you, my friend. They wanted you, they wanted you to think it was going to spike, or it's going all the way down. And all the novices always sell at the bottom. How come it spiked up? Well, because they were spoofing. They want to trigger that level. Boom, they're gonna bring it back up on you. That element of poker, I think, is very, very hard to learn on the screen, but once you do, it's actually it's kind of interesting. Do you find that those skills come in handy these days, like when you're looking at the screen? Or
Actually, it's a really good point. Because of my floor experience, maybe I'm subconsciously more aware of that, and so when I see it on my charts, then yeah, do you know what? I never thought of it, and you're probably right. So maybe that grounding in the floor has helped me with that. I think they call it liquidity grabs these days, do they? There's all this new terminology that I'm like, what was that?
Right, the kids make up names, which, like, we all know, like, long ago, it was just, it was a flush. I used to call it was a flush, man. We used to flush you. It was a flush or a rip. You lifted the whole ladder, and then boom, you dropped it like a stone.
I talk to my subscribers, and they come up with this terminology, and I'm like, I don't know what you mean, but anyway, for me, that was a short squeeze.
They make up the double tops and double bottoms are like these points of interest or whatever they make up. Like it's just a basic double top, double bottom. I know they have to make up new terms for it. I know we sound like two old guys at this point.
Yeah, I'm being left behind with that.
I don't think anything new has ever been like when it comes to trading, it just repeats itself, just under different names most of the time. It's there's really only three things. There used to be an old broker when I first started on Wall Street at Bear Stearns. We used to love him. We used to work. When we were at college, we used to work for him, and he would say, "Mr. Jealous, the market is going to go up or down unless it stays the same." And it was like, to this day, I always remember that. When somebody's like, "What do you think about the market? The market's going to go up or down unless it stays the same." I'm like, that's it. That's the only three things that they could do.
And the other one was, why did the market go up this morning? Oh, more buyers than sellers.
More buyers than sellers. That was the second. That was his second. Yeah.
And actually, I obviously I still get people, my subscribers, why did gold go up or whatever, and I say, you can't, to me, that's ridiculous to pinpoint one reason. And, okay, stocks will move for one reason or whatever, but, why did the pound go up? When, if there is no news, people need to find a reason. And of course, the press, the financial press, I don't know, the FT or something, they'll phone up a broker and say, why did the market go up? And he'll come up with a reason. And it's absurd to me. Are you telling me that all the millions of participants in the market who traded in that market that day did it all for the same reason? It's absurd.
Very often. I mean, they don't want to hear this because I've been on 1,000 ends of that conversation with the media, because I used to do a lot more media than I do these days. But and they always just want a reason. But what people don't understand is a lot of times the reason is really random. Some guy had a massive order. He flooded the market and the market dropped 10 points. And there was no news. There was no, he just flooded it. And then everybody said, oh, we're going down. Let's join the party. And all of a sudden, we started at 10. Now it's minus 20. And it happens. I remember there's this really funny book. This guy who was a money manager wrote a book. He talked about the fact that they were on the New York Stock Exchange. They got really drunk at lunch. And one of the guys, he was a huge money manager, just decided to start buying this one stock, right? And the market maker, the specialist, this is when New York Stock Exchange had specialists, was he was only good for a couple of thousand, and the guy just keeps coming back at him. So the stock started running 10%. It was, and all of a sudden, everybody in the media oh my God, there's this event in the stock, and what's going on, and everything else. And the guy was just drunk, and he was betting another guy to see how high they can get the stock up. But at the end of the day, it was up 20%, and there was all this speculation.
Wow,
it was just all nonsense. It was all nonsense.
Just classic story. Just shows how ridiculous the whole system can be.
I mean, it's always supply and demand. That's really what it is. That's why you don't want to overthink it too much. So, when the aughts came around and you moved to electronic trading, this was all still on the institutional side, right? Were you working for banks and brokers at that point?
I never worked for a bank. I traded for. This guy Roger was an individual. He had his own company, but he was self-financed. After the floor shut, I continued to work with him on the screens. I was trading the MIB options, the Italian MIB options, which was completely different to short sterling. And then eventually I decided I wanted to move out of options because market making options, you always have a position. You're never flat. So you can be on holiday and you find yourself most of the day on the phone. Hey, what's happened? Have we moved? What's my deltas? And
I
I
guess the option
decided,
position always moves, right? Like the option position, the thing, it's not static. Like that everything, because it's a derivative, and even a tiny move in the underlying is going to really skew the book one way or the other constantly.
yeah, your Greeks change. Even if you haven't traded, your Greeks change. Your gammas change, your deltas change, your thetas, your vegas. Volatility can move.
Volatility, like exactly, just like volatility itself, which is nothing. Like nothing, like price could stay stationary, but volatility changes. Everything changes in the book.
Exactly. So you're constantly monitoring your position. And I thought, you know what? I've done this for 15 years. I thought I would try to trade futures. And I thought I could trade futures. If I can trade 3 months, 15 strikes in each month, run a book like this, how hard can it be to trade the Bund? It's either going to go up or down. And I guess I arrogantly thought that I would be able to be a good futures trader. And I very, very quickly, I think I dropped about £30,000 in 2 or 3 months and realized I have absolutely no idea what I'm doing here. So I quit. And that's actually how I got into technical analysis, because I thought I'm going to have to find an edge somehow. I didn't want to go back to options trading. So that's how I studied technical analysis, and now basically I now have a business based on that now.
Were you still working for Roger at that point, or when you said I'm going to trade the Bund, you said, I'm going to pull it's going to be my own money. I'm going to try to trade my own positions.
And no, I went off on my own with my own money, put up 30 grand, in a prop house, So we'd actually go and stick our money in, and we go to the office every day so you could still mingle with traders. And I lost that money real quick, and I realized I have no idea what I'm doing. So I thought, the only way I can find an edge is to learn technical analysis. And I ended up...
Like when you said, hey, I don't know what I'm doing, you obviously had a little bit of capital saved. So it wasn't like, you had to make money instantaneously. But what was the process? Like, how did you pull yourself, like... The moment you started, you said, okay, this is out of control. I got to stop. What did you do?
Actually, I went traveling. I thought if I keep going, I'm going to blow more money. I might as well spend it on traveling. So I'd never gone traveling because I'd started working from the age of 19, straight out of college. So I did that. I read a load of books. I started educating myself. Actually, when I got back, a friend of mine said, hey, why don't you come and try option broking, derivative broking? So I said, yeah, sure, I'll give it a shot. While I was studying technical analysis. And what happened was I started saying to the clients, hey, there's some resistance here and there's some support here. And the clients were like, hey, this is really good. Technical analysis wasn't a really big thing back then. People were aware of it, but people didn't really use it. And suddenly I was picking out levels which were working. And they were like, hey, and this was like Deutsche Bank, Morgan Stanley, Merrill Lynch. So big banks. And then when I left that broking, I decided I didn't want to go be a broker anymore. I wanted to go back to trading. They said, hey, look, could you continue the service? And that's how my signal service was born, really, about 15 years ago.
So it was basically, at that time, it was basically a newsletter kind of a thing, right? Or was it was like...
Yeah, that's right. I would send out email out a newsletter each morning. Yeah.
Where you would deconstruct various support resistance levels for...
Exactly.
And which instruments were you analyzing?
God, that's a good question. I think it was mostly Bund, Bubble. What else would it have been? Yeah,
so
primarily it was futures, mostly futures, fixed income. Yeah,
fixed income. So you spent a lot of your trading life on the fixed income side, right?
I did, yeah.
But then it sounds like you moved into Forex. When was the transition, and what do you do now?
It was difficult to maintain my signals business with the banks because eventually they would start to cancel, and it was more and more difficult to contact the banks and offer them the service. So I transitioned into offering it to retail traders. And for that reason, retail traders weren't really trading futures. So I started to look at Forex. And that was great because Forex trades 24 hours, 5 days a week. So the quality of the data for technical analysis was good. And I fell into that. And
it's also like a very, very close to fixed. I mean, Forex is basically, I call them, intraday bonds, because Forex is kind of a very close cousin of fixed income, because all Forex has a role, and currencies are like ultra short-term bonds. If you think about it, they're very, very interest rate sensitive. So if you understand interest rate markets, you can really, it's a natural transition to move to Forex.
That's actually a really good point as well. Something I hadn't thought about. So maybe my STIRS background has helped me with that too. Yeah, good point.
Right. So you moved. What year was that you started sort of getting interested in Forex? Was it like mid aughts?
Probably about 15 years ago.
Right. So like 2005, 2006.
Let me see now. Hang on. I actually was doing a lot of stock markets because the global financial crisis. Now that was 2008, wasn't it?
Was that were you doing it before the GFC?
So I was definitely covering stock markets at the time. I would have been covering the US. Oh, and I was doing the DAX as well. You talked about the DAX earlier. So I was doing fixed income and stock indices, because I remember seeing a big head and shoulders pattern forming on the S&P in 2007, and saying to Deutsche Bank, I don't understand this, but there is a big negative pattern building, and if it breaks this level, there is a chance that the market could plunge. What could trigger that? And they were like, we don't know. There's nothing that we can see on the horizon that would trigger that. And of course, in the end, it played out. It's plain for anyone to see. Anyone who understands the head and shoulders pattern can go back to 2007 and they'll see it on the S&P. But it was a great prediction.
Yeah, it was a good call. And then, but Forex was a little bit after that. After GFC, you started looking at it.
Yeah, I think it probably was maybe around 2010, about 15 years ago. God, 15 years ago. It was 2010. I can't believe it.
But no, time really flies. And these days, what's the primary instrument focus? Is it FX?
Forex and gold. I also cover silver, oil, and I do still do the US stock indices. So I cover whatever. I mean, I don't cover specific Forex markets. I try to look at all the majors to try and find opportunities rather than focus on, say, three currency pairs. And I find it difficult at the moment because most currency markets are not in very clear trends. The dollar's been trading mostly sideways for years. The yen did have a good run up, but in recent months it collapse and then a run up, but in recent months I've been trading sideways. I'm primarily a trend follower, so I struggle with sideways markets.
So when you moved over to technical analysis, it sounds like you sort of, did your perspective expand? Like, I mean, when you're market making, you're just, you're day trading all day long. What are your positions like now? How do you generally provide signals or commentary or analysis on?
Well, yeah, I had to develop a strategy, which I never really had before. As a derivatives market maker, you don't have a strategy. And the other thing, actually, which was fascinating, is I never thought about trade psychology for the first 20 years of my career. And then when you start trading futures and Forex, you suddenly realize all the things that go in your head and how you screw things up. That wasn't particularly a factor when you're just market making. So that was a real interesting journey into trade psychology and understanding how to build a strategy, an entry strategy, a trade management strategy, account management strategy, an exit strategy for whatever trade you have on as well. All of these things were completely almost new to me, and I'd been trading for 20 years. I mean, now I've been trading for nearly 40 years. So for the second half of my career, I had to almost relearn, learn a whole new skill set.
So what did you learn in that second half of the career as far as like what are the best behavior practices that you think you've distilled out of that second half of the career in terms of trade management, portfolio management, account management? What are some of the ideas you think really, really are important?
Well, the first thing is to actually have a strategy. So many retail traders that I meet that are starting out, they think, the idea, the way you make money is by guessing direction every day. And I don't think anyone on the planet can do that consistently. I certainly can't. So I'm a support and resistance trader, as you said earlier. I'm a trend follower. I find that easier to do. I guess if I was going to give one tip, I would say, control your size. It's so easy to trade bigger size than you're comfortable with, and you may not even notice that you're doing it. And the one thing probably the key point that I make is, if you're in a trade and you're feeling uncomfortable about it, if you're constantly looking at the trade, if you're worried, if you're anxious, it's usually because your size is too big. It's not that you're worried that you're going to lose, because if you're a trader, you know you're going to have losing trades. It's because you're worried about the actual size of the loss. That's what you're stressing out about. And of course, that has another repercussion, because if the trade starts to move in the right direction and it becomes profitable, the anxiety starts kicking in early, because you're like, wow, this is a big sum of money, maybe bigger than you're comfortable with, and you're like, suddenly you want to take the profit, and you'll probably end up getting out too quickly.
I never thought of that, but that is a really, really good point. That larger size, actually, the moment you're tick up, you're like, I want to take profit. It's because larger size makes you think, oh my god, I'm gonna. You have that fear of.
And then you're not learning to run a trade, which is not a very important skill. We know, cut your losses and run your profits, and you're not allowing yourself to learn that if you're trading outside of your comfort zone.
Is there a particular percent that you recommend for traders? As for like, what do you think is a good size trade? 2%, 3%, 1%? Is there a number that you work with that you think is reasonable?
I teach 1%, because when you're starting out, you've got to be able to sustain a loss of 6, 7, 8 losses, and not be in a situation where you're then frightened to trade. If you're down 6, 7, 8%, you can sleep, you can wake up the next morning, you can start again. If you're down 25%, you're in a big hole. It's you're gonna really struggle to make that back. In fact, now with prop firms and the prop trader challenges that we have seen grow over the last few years, I have most of my subscribers, are on these challenges, and I say just trade 0.5%. There is now most of these challenges don't have a time limit, so you have to get to 10% eventually. Why hurry? If it takes you 3 months, it doesn't matter. And throughout that 3 months, you're learning. So it's a learning experience as well. You don't have to rush to get to that 10% target. Just take it slow, instill good habits, learn the process, make it become automatic. As we know, it's the process. It's not the profits.
It really is. Yes, I couldn't agree more. But it's a lesson that we all have to learn, and over and over and over again.
And we learn by losing and making mistakes, don't we? That's the problem. The lessons are expensive.
Speaking of that, by the way, I'm just curious. We all have horrible war stories, but like maybe give me a couple of your, and not necessarily on the floor, because we all know on the floor, you can blow up 100,000 in the morning and be up 100,000 in the afternoon, because it was just that kind of a place. But like when you were doing an individual, when you were relearning in the second half of your career, which is much more what the retail experience is like, what was sort of like the worst experience you had? Like, what was the worst trade that happened to you where you just got caught and maybe you kept going after it, or you didn't want to lift it off? Well, do you have like a nightmare story?
I don't have any particular nightmare story that I can think of for when I was screen trading with my own money. I mean, I lost that £30,000 when I first started. I did lose money. I remember shorting the stock market many times, thinking this is overdone, trading against the trend, not putting a stop loss order in, maybe even adding to the short position as it went against me, doing everything wrong. And that's how I learned what not to do, through screwing up and not using a stop loss, whatever. Because also in those days, there weren't that many books. I mean, YouTube videos didn't exist where you could learn from experienced traders. And also, how many experienced retail traders were there? That, when I was working on the financial futures exchange, it was only open about 6 or 7 years. So it's not like you had decades of traders who were writing books about trading derivatives. It didn't exist. You learned by being thrown in the pit and figuring it out. And if you didn't figure it out, you lost money and you were gone. And of course, a very large percentage of traders just didn't make it.
Like some 80%, 90%, right? It was probably down the road.
It's still the case now, I believe.
Yeah. Is there any particular technical instruments or technical indicators that you like, or are you primarily a pattern trader? Like, what is your strength in technical analysis?
I keep it pretty simple. I did what most people do when they start technical analysis. You throw every indicator on the chart, every tool, and then you weed it all out and realize what does and doesn't work. And because I cover so many markets, mainly for my subscribers, I don't personally trade that many markets, but I could be looking at 30 pairs, gold, silver, oil, S&P, NASDAQ, Dow Jones. I have to have some kind of one-size-fits-all technique for my analysis. So I use trend lines, moving averages, Fibonacci, candle formations, candle patterns. That's pretty much. And I look at 4 different time frames. It's pretty simple.
What time frames do you look at?
1 hour, 4 hour, daily, and I keep an eye on the weekly. You have to. You've got to be aware if the market's been in a bull trend for 3 or 4 months, you might just be about to hit a 15-year trend, down trend line. You've got to be aware of that. So I do advise people to look at longer term charts occasionally.
Do you try to look for confluence on all those, or do you look
Yes.
Exactly.
I look for confluence. 4 hour chart is usually my go-to chart. Although I must admit in recent months with the lack of direction, I'm probably more focused on the 1 hour chart, just trying to find a trend, a short-term trend that I can risk 25 pips, try and make, 40, 50, 60 pips.
Are you primarily a retrace trader? When you talk about support resistance, let's say the classic setup, you have a long-term trend on the daily. This, four looks relatively healthy, and we're just looking for a dip on the 1 hour. Is that the idea?
Exactly. Yeah, very basic. I buy at support in a bull trend, or I buy it on a break above resistance or a previous high in a bull trend. Very, very straightforward.
There are two, schools of thought of support resistance buying, selling, which is one is like you just you assume that support, you make bid because you don't get a second chance at the apple, meaning that it's going to drop, it's going to be very, very fast, and it'll come back up. The other school of thought is no, if this is support, we look for it to test, and then we look for it to bounce back up, and we're going to join the move back up. It needs to prove to me that it's actually going to reestablish the trend up.
Yeah, confirmation.
Confirmation. Which of the two schools of analysis do you subscribe to more?
I am the first one for 2 reasons. I've missed trades by waiting for confirmation. And I'm basically lazy. I don't want to sit in front of a screen all day watching for confirmation. I'd rather I put a resting order in there, or a limit order. I trust my analysis. I mean, I should do. I've been doing it 20 years. So I'll put the order in, and I have my stop loss, I have my target, and I just walk away. And I don't believe in trade watching. For me personally, it doesn't work. I will screw it up. I believe in plan your trade your plan. And in order to trade my plan, I need to not be in front of the screen, because that's when the emotions kick in, and that's when you start second guessing the market, and it's futile. It's really silly. If my analysis is any good, if my strategy works, then by the time I enter the trade, I really shouldn't touch it.
And then, so you're in the. Let's imagine you got filled in a trade. What's the next process? Do you come back to the next, like, when do you check on it? Or is there just simply, it's a simple, I'm buying here, I'm exiting here, it's a single, it's one entry, one exit? Or is there a management process? What happens next?
Yeah, I mean, I will trail my stops. I will keep an eye on the trade. I don't believe in trailing your stop too aggressively, because too many times, of course, we've seen it, market comes back down, retests and goes. So, some people like to move their stop loss to break even as quickly as possible because they see it as a free trade. Fine, fair enough if that works for you. It doesn't work for me. Why would I risk exiting a position at the price at which I thought it was a great entry? It doesn't make sense. So I will trail my stop, but it won't be aggressive. And I also believe in partial exits. So I will scale out. I will scale in as well, actually, over a small range, but I will scale out. So I will set myself 2 or 3 targets and exit the position as we hit each bit. Because earlier we were talking about the anxiety that kicks in when a trade moves into profit. When it happens initially, you're like, okay, this is actually a sum of money which I don't want to lose. I worked hard to get this trade. I don't want to see that money evaporate. That's where I think you should take a partial profit. I don't know, 25%, 30% of the trade off. It relieves that anxiety. You can say, okay, I'm in a win-win now. If the market pulls back to the entry point, I might even jump back in again on that portion of the trade. But if it keeps going, I'm fine, because I still have the position on. So mentally, it's a win-win.
So you give up 25%, but it's not like you move everything to break even. You're still at the stop at that point. You give up.
I would probably trail the stop halfway to break even as well. So I've taken a partial profit. I've reduced my risk. But for me, it's all about my state of mind. how do I feel about this? Okay, I feel comfortable because if the market retraces to my entry point, I can buy that 25, 30% of the position back in, maybe. But if it keeps going, yeah, I'm going to still win.
Have you ever been able to recycle the profit? Like, in other words, you take a third, come back in, and then it resumes the trend, and you're able to recycle the profit?
Yeah, I've done that. As you know, markets retest levels. So what you don't want to be doing is getting out when it retests the level. In my opinion, you want to, if anything, be adding, be jumping back. If you can jump back in, having taken a partial profit, it's all about state of mind, isn't it? It's about feeling confident and comfortable.
The single most important aspect of your system is that you really trust your levels. It sounds like that's the first step. Is if you really think those levels are good, whatever percent at a time. And by the way, have you? Percentages are, we all know they're garbage because they change from day to day. But generally, like, what is your confidence level on any given trade? Do you think that I have like a 50% confidence level, 40% confidence level? When are you?
I think around 60% of my trades work. That's a very ballpark number. I wouldn't say I give a confidence level to each trade. What I used to do is, I think this trade's probably better than that one. I'll do that trade because I still think it'll work, but I think that one's really going to work. So I'll bet more on that one than that one. And it just didn't work. I'm constantly surprised at which trades do and don't work, even to this day. And that's after nearly 40 years of trading. So I just do the same size on every trade because you don't want to. If you have one trade that loses and you bet twice as much, then you've got to work so much harder to get that money back, and it just doesn't work for me.
I'm there with you. I like uniform entries on the positions. That's interesting. So basically, what I mean, I guess what I meant by confidence level is that you have a generally strong belief that 50% of the time, at least, these levels will hold, and you're going to be you'll have at least you'll have at least a partial, and in the best case scenario, a full exit structure. And what type of risk reward? It sounds like you set up sometimes almost 2.5 to 1. I mean, it sounds like you said, yeah, I'll bet 25, try to make 50.
2 to 1 would be a normal.
Yeah, I mean,
pretty average.
We all know that the El Dorado is if you can do 50% at 2 to 1, it's like printing money.
Then all you've got to do is take every trade.
Exactly. Well, I mean, it sounds so easy, and everybody's like, oh, like, you can't imagine how difficult that is to actually achieve in real life.
It's not easy. If it was easy, I'd be a billionaire.
Exactly. We'd always take it as, it just markets don't roll that way with you. But that's the guidelines that you work with, right? And of course, sometimes some of those will be shorter, like the exit maybe like only 1.5 because you said
it depends on the chart.
Depends on the chart, depends what it's doing, right? Now, what's the duration of your trade these days? Is it hours, days? What's the average duration?
It's certainly hours because most of my trades are based on the 4-hour chart. I would say quite a few, I couldn't really give you a percentage, but quite a few have to be run overnight in order to achieve the target. And that's purely because Forex markets just don't move that much anymore.
Yeah, you're in Asia.
Yeah. Well, I remember the days when the euro US dollar would move 100 pips a day guaranteed.
I almost hate talking about that because it really makes us sound super old. But yeah, I remember those days really well. I remember when pound yen would do like 300 pips every day, and it was just it was a great.
Yeah, exactly. So now, because of that, if you want to squeeze 50, 60 pips out of a trade, you have to usually run it overnight.
Speaking of that, what is your average day like? You're in the East, you're in Thailand, so you're sort of, you're in the Asia session. How does your day go from a trading perspective?
I'm a person that's always got up pretty early, so I don't have to set an alarm, which is quite nice. When I wake up, I'm on the phone pretty much straight away in bed, looking at the markets. Has everything happened as I expected, or are there any surprises? I'm down, cup of tea, screens are on, and then I spend about an hour or two straight away really getting into my analysis, and I write my reports for my subscribers. I have like a trade sheet, color-coded trade sheet with where I cherry pick what I think are the best opportunities for the day so that my subscribers can put limit orders into their books and then go off to their job or whatever they're doing, running their businesses. I call it like a set and forget strategy, where you can just you do the work in the morning and then you're done. You wait and see what gets executed. You already know your stop loss. You already know your target. So for the rest of the day, I'm not really focused on the markets, to be honest. I'm 56. I've been doing this for nearly 40 years. I don't want to be stuck in front of a screen all day. Luckily, I don't need the money anymore. So for me, my priority is more time than money.
Do you live on the beach, or do you live like somewhere where it's?
I live on a golf course, which is 7 kilometers from the beach. So I want to have an outdoor life. I'm trying to remain as fit as possible as I age. And I want to. My daughter's 16. I want to, and we spend quite a lot of time together. That's precious to me. So yeah, family time and health and fitness is more important to me than money now. And I have a few other businesses which I have to keep an eye on as well. So,
how many positions on any given day do you think would get triggered and you have to run them?
I'd say 3 to 4 would be an average day, which is enough.
Yeah, no, that's a lot. I mean, that's pretty active. I mean, you do that 5 days a week. It's an active enough book to make it meaningful.
Being in Asia is quite good because I don't have to rush through my analysis. If I finish it at like 9 o'clock, then in the UK it's 2 or 3 in the morning. I have some US clients as well. They can put their orders in before they go to sleep. And then, as you say, maybe 6 or 7 p.m. in Thailand, which is midday in the UK. I'll have another look before I.
Are you checking on your phone, or do you go to your computer?
Yeah, I go to my laptop. I've got a plug-in screen, so I've got 2 screens, which is an easy setup. I travel quite a lot. I really like to travel, so that's great. I can just chuck it in my backpack, and I can open the screens up if I'm in a lounge, an airport lounge, or whatever, a cafe, and have a quick look.
Do you travel mainly in Asia, or do you travel all across the world?
I used to travel quite a bit in Asia. I tend to go back to Europe a bit more now because my son, who's 19, is over there trying to become a professional footballer. So I like to fly back and see him and family. And most of my friends are in Europe, so I like to go back now that I have more free time.
And when you're in Europe and you're sort of in European time, do you adjust your? Do you still wake up early and you kind of just sort of adjust?
Oh, I really suffer from the jet lag. I'm up at 3 or 4 in the morning and I could be there for a month and I'm still waking up at 3 or 4 in the morning. It's really frustrating.
Well, having worked the London shift for the last 25 years out of New York, I don't suffer from jet lag anywhere I go in the world because I basically don't sleep anymore. So
you're already on that time zone.
I'm already used to all of that. So it's fun. So amongst the markets that you kind of just trade, you said a lot of it is FX, but I'm curious. I'd love to hear your opinion through the big markets. NASDAQ, how's it looking to you these days?
Actually, I'm on the lookout for a reversal pattern. Now, that hasn't happened at the moment, but we're in a consolidation for the last few months. There's no question of that. So obviously it can break either way, up or down. I'm looking for signs that it might move to the downside. I don't have them yet. I've got a gut feeling that we're in for a correction, but there's no confirmation of that yet.
What would make you feel like we made a pretty serious top and the trade is to the downside? Would it be a break of the 20,000? Would it be break 21,000? Any levels?
I'd have to have a quick look at my chart. Actually, I don't have the levels in my head. Sorry about that. I can see the pattern in my head, but I can't remember the exact levels. And as I say, a consolidation pattern is obviously usually you have a pause and then the market continues in the longer term trend, and that's definitely bullish. So right now, I can't say that the market is going to reverse. I have this gut feeling, and I'm looking out for signs of it, but they aren't there yet. But like you say, we're going to have to break a certain support level within that consolidation pattern that would trigger it. If we're lucky, we get the break, we get the retest of the break point, and then the market goes. That would be just a really nice, easy textbook entry point.
Do you look at the Nikkei at all?
I haven't looked at it for ages. No.
Okay. What about?
Did you talk about that with Nick last? You said you were chatting to Nick Leeson last week.
We chatted a lot. Actually, I should have asked about the Nikkei. I'm just because I feel like Nikkei is actually the opposite. It's gathering steam for after 30 years, ready to finally just go maybe to.
Wow, really? Okay, I must have a look at it.
Yeah.
I've been looking at Bitcoin as well, actually.
Oh, that's actually great. great. What do you think of Bitcoin at this point?
Well, I'm also wondering if we're having some sort of similar pattern. Recently, I can't remember it was, we broke above the previous all-time high, but we came back real fast. And I could almost describe it as a potential double top. I'm probably going to get death threats for this, talking about potential move to the downside in Bitcoin. Again, it's not there. We would definitely have to break 91,000 or even 90,000 for it to trigger. If that happens, we could get to 75, 70,000. But before anyone starts sending me hate mail, we're way off that at the moment. I think we're trading at 97,000. So
I mean, having been a Bitcoin skeptic for so many years, and that kind of maybe this is the problem, that this is probably going to be the top, is because I finally become a believer. The one thing you have to say about it is every drawdown is to a higher low. Like, I mean, just secularly, it's still, I mean, there's nothing technically that could deny a 500,000, print sometime down the road, maybe 5-6 years down the road. Because it really is, has maintained its bid against all odds.
I thought it was just, I felt stupid because I didn't see it as an investment, but I forgot the fact that we can have fads where everyone wants to jump in, and this one's lasted longer than I thought. But yeah, we're in a very well-established bull trend, and I am a trend follower. So sure, why don't we go to 500,000? I can't say that won't happen.
And then, of course, ultimately, the trade that I think everybody's really involved in, one way or the other, is gold at this point. What is it looking like to you?
Yeah, gold is probably my favorite market. My calls in gold are really good. And I mean, partly because it is in a bull trend. It's not that hard to trade. You just buy it, you buy it at support, you buy it when it breaks resistance, you buy it when it breaks above the all-time high. In recent days, we keep having new all-time highs. I think I saw this morning it's got to, what is it now, 28, 20 something?
29.4. Like, we're really we're on chomping at the bits for the 3,000 level, which is really
exactly.
That's where everybody is just certainly focused.
It's the big one.
And as ex market makers, we all know that there's a ton of stop orders over there. There's a lot of optionality over there, because I'm sure there's probably barrier options over there. So people are just chomping at the bits to blow through that level.
It's going to be really interesting.
And then probably flush at 100 points before after it comes down. By the way, speaking of all those, I mean, these are all tricks of the trade that you and I both know. How do you sort of anticipate, like, when it comes to all-time highs on instruments? Do you have any particular techniques that you like to employ as far as trading?
I just buy on a break above an all-time high. I will buy if we come down and retest the previous all-time high, if it ties in with things like trend lines and moving averages and my Fibonacci levels. Pretty simple stuff. Gold's getting very overbought, and as we approach 3,000, it's such a big psychological number. Yesterday, for example, I was on a little bit of an alert for a new all-time high and then a big pullback. I'm on the alert for a shooting star candle or a bearish engulfing candle, something that tells me that there is a bit of exhaustion. And I thought we might get that at the beginning of this week, and I'm wrong. Yesterday we just pushed higher and pushed higher. So I don't try and anticipate. I don't have any expectations. I wouldn't gamble. I will wait for a signal.
So assuming we get a shooting star, or we get some kind of a signal that confirms. You said you're primarily a trend trader, but you will tactically go counter trend. When you were looking at it? Are you looking just simply to let it come down to support, because ultimately you want to be on the long side of gold? You're just looking to buy it cheap.
On a single candle, I would never get into a short position. Even if it was a bearish engulfing candle, I wouldn't. I would. My first assumption would be that, okay, we've seen a negative candle. That is a bit of a bull trap. That doesn't signal to me that the market's about to completely change trend and collapse. It probably signals that we're in for a period of consolidation, because that's what normally happens in a bull trend. You hit consolidation first. Markets very rarely just go whoop and then whoop, unless there's been a specific trigger. So I will be on the alert for, okay, probably consolidation. I will still be buying. In a consolidation, I will still buy at support levels. it's still the lowest risk way to trade a bullish consolidation. I won't be really looking to get into short positions unless we've got a very well established channel and the upper trend line has been tested 2 or 3 times. Then I might say, okay, well, you know what, it's worth having a little punt with a tight stop, and I might be able to scalp this level.
That's a really interesting point. I haven't thought about it a lot, but I think it's such an underutilized profit idea, which is that in a bullish trend, buying at the consolidation, at the low of the consolidation support is one of the least riskiest, one of the most easiest profit trades there is, because you already have all that momentum. You're able to basically buy cheap, and it's even if it goes halfway range, you're still going to make tons of money.
Yeah, the buyers are coming back in eventually. And I don't even mind if it breaks that level and I get stopped, because I know that it's going to come down to the next support level, and that's probably going to be an even better buying opportunity anyway. The bounce is probably going to be stronger, especially the first time it tests that support level. So, hey, I don't mind. Okay, I've lost on that trade. A better opportunity is probably coming anyway.
So, what are you doing these days, Jason? I mean, you obviously have the service. Is there any new projects that you're starting for retail traders?
I've really been getting into the education side of things. That, as I spoke to you earlier about the whole trade psychology, I have really found that fascinating. And over the last 5 years, as I've teaching traders, I've really got into the psychology side of things. I've really been breaking down people's thought processes with them. I have learned so much from teaching people and understanding what makes them tick and why they screw up, why they revenge trade, why they overtrade, all the things that we know you shouldn't do. And I've actually been working with one guy specifically lately that's taught me so much. When he came to me 3 or 4 months ago, he had a really great strategy. It's based on the Wyckoff system, which I'm actually only learning about now. And that's fascinating. So it's been very educational for me too. And he was all over the place. He would have a great run. He would do really well. He can pick trades that you risk 1 and you make 7, 8, 9. I'm like, wow, my strategy doesn't do that generally. This is incredible. And he's trading off like a 5-minute chart. So, but he just kept screwing up. He'll do well and blow it. And I worked on his trade psychology. And now pretty much every day, he just makes money. And that is such a massive sense of achievement for me to have turned it around.
What was the key tweak with him? What was he doing wrong that you fixed?
It was quite a lot, but if I had to put my finger on one key thing, he would overtrade when the trade went wrong. He'd lose control of himself. He'd get angry. He would revenge trade, and he would lose all his discipline. So one of the things I said to him was, right, we need to limit how many trades you do per day so that you really cherry pick what you do. So I said to him, right, we're going to have a rule. You only do 3 trades a day. And that, along with several other ideas, has really worked for him.
That forced him to choose, and also to force him to walk away and not
exactly.
Yeah,
exactly.
Because there's always another day. There's always another day.
Yeah, and that's actually a really good point. There's always another day. You have to wake up tomorrow morning feeling confident and not having dug yourself such a big hole that you're frightened, you're in the wrong state of mind. It's so important to wake up the next day feeling confident. And actually, I just want to say one more thing. I talked earlier about how you got to control your trade size, and partly you've got to do that because confidence is obviously so important. You need to wake up the next day ready to trade, not frightened to trade because you can't afford to lose more money, and you will know. You said, do I risk 2%, 3%? You can do that, but you can't do that until you really trust yourself. You know that you will make the right decisions when you're in a trade, and we all get to that point eventually. That's when you can start to scale. When you think, right, when I get into a position, I will not screw it up. I will do what my strategy, says I should do.
It's having faith in your strategy. Which is ironic enough, we always talk about you have to have reason, but ultimately I always find that it's actually having faith in your strategy, which is based upon reason. But it's
also having faith in yourself to execute that strategy without screwing up, without getting FOMO and revenge trading and over trading and running positions too long or not cut,
Yeah, I guess that's what I mean, because having faith in your strategy means that you don't deviate from it. You actually accept it. And then accepting the fact that it's going to be wrong quite a lot. Like, in other words, not once you lose, you go back to the strategy. You don't try to change the strategy.
That's true. That's a really good point. That's a really good point. You have to basically, you have to have, let's say, at least 100 trades of your strategy to be able to know whether the strategy works. And then when you have, let's say, the 100 trades, you can then actually optimize it. Okay, how can I improve the strategy? What do I need to tweak? Do I need to make my stops tighter or less tight? Do I need to take profit sooner or later? You know, do I need to maybe wait for confirmation, like you said earlier, instead of jumping, instead of having limit orders? I don't know. There are ways, you can't do that until you have a data set to actually play with.
In my experience, certainly for me, but also a lot of traders in my room, I think that's the key thing, is that most traders can't envision 100 trades of the strategy. They're just thinking about the next trade. All they're focused on is, I want to make money on this trade. Whereas instead of thinking this is just one out of 100 that I'll be doing in order to see, where I stand at the end of a couple of months. That's the ability to just kind of take yourself out and realize whatever trade is happening, however bad it is, whether you screwed up or whether the market is really screwing you, or you just got stopped out of
the big plan.
Right.
That's actually a really good point. It brings me on to something else that I was working on with this guy I talked about a few minutes ago. He said, I don't know, let's say he's got 10 grand in his account. He said, I want to grow that to 30 grand over the next 3 or 4 months. I said, okay, that's super ambitious, but with your strategy, that's actually possible because your risk reward works so well. But the thing is, in his mind, okay, I want to grow it to 30 grand, in 3 or 4 months. But the problem is, what he was really doing was trying to grow that money to 30 grand immediately. And like you just said, you've got to take it a step at a time. So I said, look, try to get to 15 first this month. If you can make 50% profit in a month, that is phenomenal. But with your strategy, it is doable. Forget about the 30. You're trying to get to 30 in 2 weeks. You're not trying to get to 30 in 3 months. You're saying that, but you're not doing that. You're over trading. So it's managing expectations.
My partner who trades Forex, one of the most disciplined people I know, she's amazing. And her rule is she just tries to make 100 pips a week. That's it. Like no more. No, I mean, occasionally she'll obviously have some weeks where there's 200 pips and other weeks where she'll be negative. But the very, very fact that every week starts fresh and it's just that 100 pip target, that is amazing because she's, over the last 5 years, it's been really like about, I think, 5,000 to 6,000 pips in total P&L because she's just so, focused on this, on one step at a time. She doesn't think about, I'm going to make 5,000 pips, in a year. She's thinking, I'm going to make 100 pips this week. That's all I'm going to do. And that keeps her very, yeah.
The other thing is she doesn't have the male ego. We need to be right. It's not just about making money. We need to be proved that we are right. And the male ego gets in the way.
A quote that totally changed my whole life. And it was, the guy said, you do not want to be right. You want to be in the right mindset. Winning is not about being right. It's about being in the right mindset. And that was really, really altering for me because I realized it's about having the control, the mindset. It was a book on negotiation, but it was literally one of the probably most useful book about trading I've ever read because when you think about it, the market is just basically a negotiating partner with you all the time. And it does all these, all these psychological tricks on you all the time. So it's fascinating. I find a lot of times that I now these days get much more valuable information from completely non-trading related information that I do from, trading books and stuff like that, because I think we all have absorbed pretty much all the trading technical knowledge and fundamental knowledge that, we're pretty much going to learn, and even quantitative knowledge. But the interesting insights sometimes come from completely different disciplines.
Yeah, that's actually a really good point because at the end of the day, all you're doing is finding out stuff about yourself.
Right. Right. Yes.
And trading will definitely expose all your weaknesses. That's for sure.
Yeah. I always say it will expose them raw more than anything in your life. Your relationships, it will trigger more buttons in there. You'll really get to know yourself. It's really, really true. Yeah. Anyways, Jason, I don't want to keep you any longer. You've been wonderful. Thank you so much for sharing such a wide and varied career. And it's great that you're helping a lot of retail traders. It's really, really fascinating because I also find myself now working with a lot of traders who are doing, passing the props. And that's been very, very rewarding for me, because like having people succeed and get funded and then succeed even better when they get paid out is really been a great process.
I'm enjoying that. I find it very satisfying when you help someone crack it and they're like, wow, okay, I've got it, and now I'm consistently profitable. It's a good feeling.
It's actually sometimes even a better feeling than you cracking it.
It's what I find most rewarding now, because I said earlier, I don't, trading is almost a little bit pointless to me. I'm lucky enough that, making a couple of $100 in extra a day or whatever it might be, it's not going to make any difference to me. And that gives me a lot of satisfaction talking to people and getting them through what they're trying to figure out. It's a puzzle, isn't it? Trying to figure out what they need to do to become consistently profitable. And I really enjoy that challenge.
Thank you so much for being with us. Is there any specific thing? Is it they can reach you at daytraders.co.uk? Is there any place do you have a Twitter account or an X account?
Basically, if you just Google my name, Jason Sen, it all pops up. And my website is daytradeideas.co.uk.
Thank you so much for being with us. And thank you, everybody. Don't forget to please subscribe so that we can bring you more great trading interviews to the Trading Battle. I hope you really enjoyed this with Jason Sen, who's a veteran who's really lived kind of two different lives, the life pre-screen and then post-screen, and then life sort of as a really institutional trader, and then as a retail trader who now coaches retail traders to help them do the best. It's been wonderful. Jason, thank you so much again. For the Trading Battle, this is Boris Schlossberg, over and out. I'll see you guys in the markets.